Time is ticking quite fast as investors have cautiously awaited the federal chair Jerome Powell's speech at Jackson Hole Symposium today at 1400 Greenwich Meridian time, which is about 3 p.m. West African time here. Now, in the next few minutes, some more details will come through from Wyoming, where the Jackson Hole conference is holding. Now, European shares slipped, opening up today as investors fret over downbeat German consumer sentiment data due to the rise in energy costs as well. Well, joining me now to discuss this and more, looking at the latest plot twist to the global stock market base and also looking at the cryptocurrency market reactions, I have Benga Unifade, startup founder, Wolf Hackers. Thank you so much for joining us on the show today, Benga.
Good afternoon.
Now, let's start this conversation really now with the global market's response to today's expectations from Wyoming over the Jackson Hole Symposium, the aggressive rate hike central bankers have adopted from the European region to the United States, Australia, here in Africa, Nigeria as well, and then the intent to rein in inflation. What do you make of this market response we've seen, especially using the developments we've seen so far as well? You're in the United Kingdom, where you're based, as our start-off point. What's happening there? What are the responses to today's happenings?
Sure. So it's quite funny, actually. I mean, just literally 4 minutes ago, the market opened, and it did open high because the market is expecting a dovish reaction from the chairman. However, inflation is at an 40-year high. With the key market indicators, that inflation expectation, the wages, the breadth of the price pressure, the forces of globalization, and demographics, which are all the tools they have to rein in. So I did actually say this in the morning. A group of people that I was talking to, that so we've got a two-edged approach here, really. The chair, Jerome Powell, has all the tools, all the ingredients to go soft. Because if you think about it, just this morning, personal consumption expenditure, which is United States indicator for the average increase in price of all domestic consumption, it did actually come lower than expected this morning. We do have a very strong dollar. People are actually scared. That's the other edge of the sword. At the same time, companies are reducing, they're forecasting a lower guidance. So that's one indicator for you to think, you know what, it might go soft, because we've got, record high job, how do I call it, employment. The labor market is strong, wage increasing as well. But of course, inflation is actually eating off the bottom line. So that's the other edge of the sword. So if you think about what is the next rate of action, people actually think, as long as we get inflation in the high 8s, which obviously we believe has peaked now, according to the PCI data, what the chairman can do is to rein it down by constantly hiking rates. And that will be a demand destruction, which means the economies cannot hire, kind of force a trigger, a recession. And of course, the dollar is a global currency. The world relies on the dollar. Everybody wants the dollar to, when you're being scared, you don't invest, you put the money in the dollar. However, he's actually in a very difficult role, because since Jackson Hole, there hasn't been much expectation started since it started in 1982. Personally, I think it might go dovish and start looking, because everything they've been trying to do in order to batter inflation hasn't been working right now. But the market keeps going up. But they have to, they have to demand destruction, really. And some people are thinking, do you know what, maybe it might just go soft until next year, because you've got there's a little bit of politics involved here. We have the midterms election, which is literally happening in a couple of months' time. And so people might think it might just go soft and start the real destruction again next year. So he's in a very tough situation right now, whereby the market will be reacting to every word that come out of his mouth. Unfortunately, he can't win.
Okay, now, Benga, let's also talk about the Russian ruble, also opening almost flat today as it's sticking to the 60 mark against the US dollar. And what are some of the likely options for investors as we have market volatility taking center stage? Likewise, inflation, which you've also mentioned, and this shift in ground in terms of consumer spending trends, really.
Sure. So there's a quite funny thing with. It is very dicey. There's something funny with the Russian ruble, actually, which actually hits an all-time high a few months ago. But there's got to be a problem, and I did say this. If you are trading the Russian ruble when it was at all-time high, it's actually a false economy because number one, it couldn't trade on the global market, so no one is actually trading it. So it's actually, even though it looks very cheap, but you can't even buy, you can't even trade it. So it's looking at an all-time high because no one can trade it, and so there's not a lot of people accepting it in the global market. And that's number one. But at the same time, number two, for some reason, if you look at the Russian-Ukraine war, it kind of looks like Russia is winning on one side of that angle. Because if you think about it, 40% of Europe's gas comes of course, from the Russian Federation. And Russia's got, they've got tons of clients right now who are still willing to pay at about the same rates, really, for what Europe is actually been looking for. So that's actually created a strong ruble, but the fact that it cannot be traded, it still remains that strength. Hence, I did call it a false economy because you can't just trade it right now in the global markets. And even though Russian markets actually open, but it's opening slowly, gradually, because bulk of the market's been destroyed on the on the Western continents as well. They're not allowing them to trade on the exchange. So that's one angle. But on the other angle, you've got the Russian economy, which the Russian gas, unfortunately, right now, I think satellite images showed this morning, they're just burning some of these gases away because, bulk of the gas is actually being shipped to Europe. But right now, Europe is looking for an alternative, hence which the consumers are, myself included, are now paying for, with gas prices and utility bills going on at a rate I've never seen before. I think we've been expected for an increment in my bill personally, and of course across the UK and Europe, literally of increments of 80%, between now and 1st of October, with the government trying to curtail the energy companies, saying, okay, we will get into some of your profit. You guys are making it. Somebody's got to be winning, right? Because energy companies are saying they are getting these gases. The wholesale gas has gone more expensive. UK tried to fill in the gap, but they can't. And with the Nord Stream 1 as well, which is a Russian plant, which is actually going on for maintenance. So everything's just at an all-time high right now. And there's just no way for the consumer to win except the wholesalers. And of course, it doesn't look like whatever they're doing, the sanctions, doesn't look like it's working against the Russian Federation right now.
Wenger, let's also talk about the cryptocurrency market now. We've seen prices managing to rebound slightly just yesterday, but uncertainty remains high, even looking at this, the expectations from the Federal Reserve's annual summer gathering in Jackson Hole. Do you think cryptocurrency markets will have a hard time outperforming due to the significant macro headwinds we're facing today?
So the crypto market has actually been the last consideration when it comes to people right now. It's a risk-on asset, unfortunately, and we all know that. And so there's something that's been happening since last year. If you actually look at both the crypto market and the Nasdaq, which is the exchange that tracks the tech companies in America, they have actually been a positive correlation. So when the Nasdaq moves positively, the crypto tends to follow. And at the same time, both of them are trailing the US dollar. So the US dollar has actually been extremely strong. When sentiments are positive about the Fed going soft in order to increase growth, then the crypto tends to follow. And crypto's actually try to regain strength from the lows of when it went below $18,000 a few months ago. However, the market's jitteries is literally everyone is listening, paying attention to. Of course, you can't fight the Fed. That's the first commandment in finances, and say the first rule. And crypto's actually literally also paying attention. Crypto's actually always been the leading asset when it comes to return for the past 10 years or 13 years since its inception. However, this year is looking likely not to be the case because, well, it seemed like market bottomed around July. Crypto did look like it bottomed as well, but it's actually been struggling to retain or regain, even the half of its highs or lower again. So yeah, it's we're stuck between a rock and a hard place. And again, they do say that history often repeats itself or never repeats, but it tends to have a trend. But this is not exactly the same 2008 dip or recession that we had in the crypto market, like the crypto winter, like they call it. So crypto is actually paying more attention as well. As long as there's a growth, if there's no destruction in growth, I believe crypto will rally eventually. But right now, this is one of the markets. There's been very, very low volume pouring in, not much dollars pouring into the market. Hence why the dollar is actually at a 14-year high right now. So crypto is actually unfortunately being affected right now. So we do get the odd rally, but it tends to fizzle out quickly because the sentiments are still very negative.
Benga, let's wrap up this conversation now, looking at your forecast for the global stock market and also for the rest of the year 2022, and also looking at the cryptocurrency market. What do you think will likely shape up? What new disruptions should we expect? And in the case of investors looking for havens, what should they really be looking at this point in time?
Okay, so the last time I was on the show, I did think investors should be looking at oil, and oil hasn't actually peaked at this minute anyway. Unfortunately, as long as there's a scarcity, while Europe is looking for an alternative, oil demand is always going to still be there, and natural gas, even natural gas came at a 14-year high as well right now. So market's actually looking that way. So as an investor, you will be looking at this scarce commodity. Even gold is actually playing its parts as well. So that's one area. As an investor, if you want to be a long-term investor, I probably will be looking at I'll be looking at some tech corporations which seem to have bottomed, but you've got to think about these organizations that are consistently profitable, when it comes to the share price and when it comes to the quarterly reports or earnings. So I'll be looking at some of them, but not fully exposed. And of course, cash is a position as well. In a high inflation, you really cannot win, but you've got to think about the worst or the best of the demons in what you've got. So a few things. You've got to play very well, really. You've got to look at some of the valuation corporations or value investing, the blue chip, which are constantly, giving you that feedback in terms of dividend. You've got to have a little bit of exposure to some of the tech stocks. I don't think the pain is over yet. And at the same time, so I'm not really putting anything into cryptocurrency right now, just due to the volatility, and I think it's probably going to be the last to be touched when it comes to investing. But at the same time, I'm keeping half my portfolio wildly in cash, just to be careful. You can't be too sure. Looking at the end of the year, I think, unfortunately, we're still, with inflation still going up in England or in Europe, it hasn't exactly peaked. While in America, they think it has peaked. But one thing affects everything else, like the saying philosophy. If Europe is still not peaked, because recently the euro went below the dollar. So the forex rate actually was just destroyed at some point, and it's just struggling to reclaim its highs. Likewise, GBP, which is correlated with the euro, that's still not climbing either. So you've got to pay attention. If Europe is not climbing, the US market will not climb, because they've got to have a market to sell to, and they've got a lot of relationships together, interworking relationship. So I'm keeping half of my portfolio in cash, just paying attention. But at the same time, this is what I tell people: this is the sell the rally market. The market's giving you an opportunity. You've got to be able to take it right now, and just make sure you are liquid.
Exactly. Make sure you are liquid. Thank you so much for your time on the show today, Benga Onifade. And definitely we'll also have the conversation around the European Central Bank's moves. September is also another big month, and we're keeping our tabs on all of the latest development. Thank you once again for your time.
Appreciate that. Thanks for having me.